let's not take our eye off the big ball, that is the budget itself. Given the government's big promises for providing housing for all by 2022, a lot of investors and brokerages expect that budget 2015 could see several sops for the housing sector. For instance, rebate offered on home loans could increase. We spoke to Neelkant Mishra, the director at Credit Suisse. He was with us last week, and let's hear him out on where he thinks the government might tap to get a multiplier effect for the economy.
I personally think that the best way to spend, and this is where I'm really doing prescriptive stuff, so the chances of going wrong are very high, is they should spend on housing and they should spend on rural roads. Because one, these are things, and especially the housing, given what China went through over the last 5 years, and the aftermath is a bit undesirable, but if you go from 3 trillion to 9 trillion GDP, having 3 bad years after that, I don't think is that bad an outcome. An interest subvention on 15 lakh or sub 15 lakh houses, construction tax, service tax waiver in construction, possibly even a capital gains tax waiver. And suddenly thousands of contractors all over India's towns become active. You start seeing demand for cement and steel.
Okay, so a whole lot of expectations from the sector. So we have two gentlemen, one who is a part of the industry and another who tracks the industry very closely. Navin, Raheja, the chairman and managing director of Raheja Developers, and Arun Aggarwal, the vice president institutional research at Religare Capital Markets, join us. Gentlemen, morning to both of you. Mr. Raheja, I'm going to start with you. You have both luxury as well as affordable housing projects. So just tell us, from an industry perspective, what are you expecting from the budget this time?
We will only want one thing, that government should empower the consumers, government should give money in the hands of consumers, tax incentives, so that they go in for buying houses. It should be given at least for first house. It must be given to fulfill the dream of housing for all by 2022. So we only expect that. And for that we need to empower the consumer. You have to do one thing, you have to give them A, tax incentive which make him buy. B, you have to give him the enough disposable income so that he can pay the EMI. The first one is, say it is a section 24B, you need to increase the exemption limit of interest repayment on buying your first house. This limit was used to be about 1.5 lakhs. Last budget it was increased to 2 lakhs, while this was introduced way back in 1999. Now you must do index correction to that, and currently the industry demand is that this limit should be increased to 5 lakhs, because property prices have gone down by more than 2.75 times, from 1999 till now. So this limit should get increased so that people are induced to buy in the name of saving their taxation on buying the first house. So one is that. Second is because of other priorities now of lifestyle. People are not able to get disposable income enough to meet the EMI requirement. So to correct that and bring it within that bracket, what you need is that you need to bring down the interest rates from current 10.25% approximately average to maybe about 6 to 7%, so that the EMI equates with the rental payment and they can take out that much of...
Mr. Raheja, come again. What was that math that you just spoke about?
Earlier, what we want is that the disposable income to be able to make payment of EMI. That is, the income which can be spared to make payment of EMI, because of the high interest rates now, which is ranging average about 10.25% for home loan. If that is brought down to 6 to 7%, which used to be there at the beginning, that is 1999-2000, it used to be 6.5%. Even if currently it is brought down to 6.5 or 7.5% or even 8%.
You mean interest rate?
I think that interest rate.
Okay.
So you need to do hand holding for at least a house, first house, where the home loan requirement is up to 50 lakhs, the interest rates for home loan should be brought down. They may be by subsidy, they may be by inflow of free capital, they may be by government giving hedging, to keep the foreign money price at the stable level, cost of money. Instead of allowing Indians to take out $2.5 lakh every year and buy a house outside, it should be, you should allow money from outside to buy houses and make investment in real estate in India. It should be the other way around. So we expect the budget to address that issue also.
Okay. Well, Mr. Raheja, just one follow-up.
You have to empower. Basically, you have to empower the consumer.
Sure. Just one follow-up. You said that the exemption limit on interest repayment, you expected to go up from 2 lakhs to 5 lakhs. What about on the principal repayment under APC? Do you expect the exemption limits to be hiked, or given that how cash-strapped the government is, this is an unrealistic expectation?
See, we have given that limit only to 1.5 lakhs. And that includes all sorts of payments. That includes payment of fee for the children, school fee. That includes payment of provident funds, includes payment of other investment assets.
All right.
So the money left only for the repayment of housing loan installment is not adequate. If you look into the current housing prices, and particularly in urban cities, this limit definitely needs to be enhanced by at least maybe 1 lakh rupees further, so that the repayment can be made.
Mr. Raheja, we are running out of time. Let me get Arun into the conversation as well. Arun, how are you all playing this expectation as a stock investor?
Yeah, so basically, there are two key things which are very important in the real estate sector right away. Is that one, the volumes pick up, which is specifically a factor of affordability. And second is about the visibility for execution to improve. So the key thing over here is that if you are expecting some kind of improvement in affordability for the consumers, and it's coming out of improvement in monthly household income, which can be attributable towards home buying, obviously can help significantly for any of the real estate developers who are looking to develop mid-income real estate.
Now, are you looking only at real estate, Arun Aggarwal, or are you? Is your brokerage looking at housing and housing finance? What would be your pick of the pack there?
See, the thing is, I'm a real estate analyst, so I would be talking more about the housing rather than housing finance. So from that perspective, obviously, the housing is a bigger enabler as far as I am concerned. So frankly, could be a way to play through HFCs as well. But yeah, as far as the housing is concerned, residential is concerned, people who are doing more mid-income houses does get significant benefit if any of these expectations come true in budget.
You haven't given us any names.
So it starts with the players which are specifically into mid-income segment, people like Sobha, people like Prestige, Sobha specifically because they are getting into aspirational homes. People like Ashiana Housing, we have talked about them earlier. Purvankara, from the north, DLF, if they are getting into that New Gurgaon region with some kind of projects which are coming within 1 and 1.5 crore rupees range.
All right. We'll have to leave it at that. We're out of time, Mr. Raheja. Arun, thank you very much for joining us with your thoughts on what seems to be firing up the imagination of the markets at this point in time. Expectations of more tax giveaways. But we just have to remember that the government has a 3.6% fiscal deficit target as well. So while it's good to hope and dream and expect, while making stock investments, just remember that the government has its arms tied as well.